trend continuation Gartley. Let's now look at the TRG, or the trend reversal Gartley. To review, the TRG, or trend reversal Gartley, is the same as the TCG, but we have two additional criteria. Number one, we want to see the WX leg prior to the X, A, B, C, D. This is similar to the material that Gartley originally talked about in Profits in the Stock Market. In addition to the WX leg, we're looking for one other thing. Do you remember what it is? It is volume. And so what are the rules for volume? First, he mentioned the fact that there be a decline in volume in the WX leg. So we want to see a decline in volume in the WX. Then we want to see an increase in volume on the XA leg. And then we want to see a decline in volume on the AD leg. So the trend reversal Gartley is the same as the TCG, plus we're going to add the WX leg and the volume rules according to Profits in the Stock Market. So let's have a look at some examples. So I have a daily chart of Hartford Financial Services Group, HIG. From the S&P. It's Friday afternoon after the market close. You can see the date and the time here. I thought rather than giving you idealized examples, here's a real example. I don't know if it's going to work, but I'll show you how to do a TRG on this chart. So to start, first of all, remember we need to see a WX leg. So we got a rally here. Looks like perhaps this could be the W down here. Here's the X, and then there's A, B, C, and we're looking for a D point over here. First thing that we should do is apply volume here and see if the volume rules apply. So what we do is we go over here to volume, drop volume on the bottom, and let's see. Over here, the WX leg, remember we want to see a decline in volume during this leg here. So high volume here, lower volume here. It looks like perhaps the volume has been going down. Let's just identify that with a trend line. So I can turn on the crosshairs so we can line up with the X point. Okay, so that looks like a good decline in volume during the WX leg. Now the XA leg, we're looking for an increase in volume, and it looks like we have an increase there. So let's draw a trend line. Line that up with the X from this here. Okay, now during the AD portion of the Gartley pattern, the TRG Gartley pattern, let's see, does it look like we have a decline in volume? Absolutely. So let's draw a trend line there from here. Okay. So the rules for volume are applicable to HIG in this scenario. Now that we've done that, we can even just move the volume down like that. Give us more room to work on the white space here. So let's first do our Fibonacci retracements. Turn on the lock from the high to the low, drag that across. Now we're going to do the price extension. So click the low, click the high, and click the low here. Okay, so we can see that the price extension line is very close to the 786. So let's turn off some of these Fibonacci numbers. 38.2, 48.6, 61.8. Okay, so what we're looking for is a sell signal based on 29.59. And we're going to put our stop above 31.08. I'd be inclined to go with 31.13. So we got a bearish TRG 786. Here's the WX leg with declining volume. Here's the XA leg with increasing volume. And here's the AB equals CD symmetry up to the 78.6% retracement. And this portion of the move from A to D has declining volume. So we would be looking to sell at 29.59 with a stop above 31.08. I would use not 10, not 31.10. Everyone's going to use that number. Use a number above it. I would use 31.13 based on the fact that most people don't like the number 13. Odd numbers are powerful numbers that people don't want to use, so use that number. Let's look at another example. Now here's a daily chart of Emerson Electric Company, EMR on the S&P. This is a daily chart, and we're looking at a bearish TRG, trend reversal Gartley. So we're looking at a WX leg going up to a high, XA, AB, BC, CD. With the volume applied to the chart on the bottom, let's draw some trend lines. So let's draw a trend line to identify a decline in volume going into the X point, which is here. Okay, so we could pick off that high there on the volume, and we can draw a trend line. We can draw a trend line whether it be here, there, to identify the fact that we have decreasing volume going into the X point right here. Now, do we have an increase in volume as the XA move takes place? You bet. Look at this. Okay, so once again, a trend line from here up to there. So we have higher volume. And then from the A to D point, we have declining volume. We'll draw a trend line there. There's the D point over there. So, okay, so our volume rules are in place. Now let's draw our retracements. First of all, from the high to the low, the XA move, we're going to do price retracements. Turn on the lock. From the high to the low. And now we're going to do our AB equals CD price extension. So go to price extension, click the low, click the high, click the low. We can see that the 100% lands right beside the 786. So now we can get rid of these other Fibonacci retracements. So there's our entry would have been at 56.04 if we're selling on the fib number, and we would put our stop above 59.05 for a sell, and we can see that it came down nicely after that. So there's a great bearish trend reversal Gartley on Emerson Electric Company on the S&P 500. A common question that comes up sometimes is in regard to the XA leg, comparing it, the duration of time that it takes for the XA leg, and comparing that time with the AB equals CD. A lot of people say, well, maybe this took too long to play out. How long is too long? Well, in doing my research, in writing the Gartley Trading Method book, I started to include geometry into the equation. Geometry is one of the best ways to identify when a Gartley pattern should complete. So to show you how I would use geometry with this Gartley pattern, I'll show you a little preview of what we look at in the apprentice level of the geometric trading course. We use the Beck's emblem to identify when a Gartley pattern should complete. So in the Beck's toolkit, we have the Beck's emblem over here. I've already applied the Beck's emblem to the chart here on a layer that I'm hiding right now. I'll just turn it on. And the other thing that we learn in the apprentice level is the use of quadrilaterals, which is very similar to the price extension tool. Now I'm going to turn off the layer that we just looked at with our price extension and price retracement. So I'll hide that. And I'll show you how this works. Let's get the scaling right here. This is another subject we discuss in the apprentice level, is proper chart scaling. And you can see that the XA move coming down here comes down, it comes up, it finds resistance at this angle, comes down and finds support at this angle and this part of the square. And now it starts to come up, support here. And the way it works is that we're looking for resistance on this particular angle right here. The second that this market touches this angle, which would have been right here at 57.53, that would have been a sell signal. The vertical side of the circle also identifies reversals in advance. So you can see it was off just by a couple of bars here. This would have been your sell signal, and you got a time and price projection right here, and we can see it went down from there. I'll just turn on our traditional methods of analysis that we've learned here, and you notice the differences. With just the horizontal Fibonacci line here, we would have sold at 56.04, but with the angle on the Beck's emblem, we would have been a seller at 57.52. So a little bit better entry. The stop still ends up being about at the same spot, above 59.05. However, once we start using geometry, this will identify when a Gartley pattern will complete. See, this Beck's emblem is telling us that if this Gartley pattern does not complete before it breaks out of the circle, it's not worth doing. So that's the telltale sign to identify when a Gartley pattern completes. So we just got it right there, just before it broke out of the circle. That would still be a valid TRG 786 Gartley trade setup. So let's look at some more examples. Here's another example of a TRG 786. We have Rider Systems here. I've put a volume indicator at the bottom of the screen, and I changed the format so it looks a little bit different. You can change it to a step or line, whatever, dot. I got it on step here. And I just wanted to show you something. In regard to the WX leg, let's say that we have W to X, X to A to B, C, D like this. And sometimes the volume might start picking up before the low is made here. And that's what we see here. It starts picking up over here and moving higher. So it's kind of subjective in regard to the volume rules with this trend reversal Gartley, because you look at this, and as the market's declining, we can see the volume's high over here, and the volume has been drying up, as Gartley mentioned. But as we start to get into the bottom in this general area, it starts to pick up with the highest level of volume right over here at the A point. So don't expect a volume to continue to dwindle down to this exact bar. Sometimes it starts to pick up as there's some accumulation taking place in this general area here as a low is made. So here's the volume rules. The volume declines in the WX leg. It spikes on the XA, and then it declines again on the A to D, because D would be over here, and we're really low on the volume over here, so there's definitely drying up of volume there. So we have the rules for the TRG. Let's do the price retracement first. Do the low to the high, drag that across, and then let's do the price extension A to B to C. Okay, now I want to show you this because what this is a TRG 100. You notice that the 100%, the price extension tool is closer to the 100% level versus the 78.6. So in this case, the analysis is telling us that this should make a double bottom. So what you could do is put a buy order in here on the low of this bar here. I'd like to show you an example of a TRG 100. So here's Newmont Mining. We have the WX move, and there's definitely a decline in volume as you can see here. And then as we move into the XA move, up to here, this would be the XA. We can see volume spikes. And then as it goes down from A to D, volume goes down. If you notice what I've done here, I've put the retracements on, and then I've done the price extension. Here's AB equals CD, and turn off the crosshairs here. This red line is closer to the 100% level than it is the 786. So what it's telling us is that this should be a double bottom, and that's exactly what happens here. Just one tick beyond this low, we have a double bottom. You say, Ross, if I was going to do a trade like that, how would I do it? A number of different ways. One of the best ways is to use a 1 bar trailing stop. So what we would do here is I will turn off this layer so you can't see that. All we know is that the market's coming down and we want to be a buyer at some point. We don't know if it keeps on going straight past the X point, we don't want to be involved. So what we could do is apply a 1 bar trailing stop. And to do that, we would go over here to Tools, Back, X bar trailing stop. And above here, we're going to apply it. But as it is a 3 bar trailing stop right now, we need to change the properties to be a 1 bar trailing stop. So we go over here to period, change that to 1. Okay, good. So now, as the market's going down, we don't know when we want to enter. It could just keep on dropping like a stone like this. However, once it makes a low, and we have a low bar here, we can use the high of that low bar to enter, which by using a 1 bar trailing stop above it, we can enter it, in this case, at 39.81. We would be a buyer right here. And if you wanted to use a stop, you could put it below this bar right at the low here. So that would be your initial risk from this high to that low. So that would be a way that you could get into the TRG 100. So to review what we've covered off here, a trend reversal Gartley pattern is one and the same as a trend continuation Gartley pattern. However, we're looking for the WX leg and also Gartley's rules for volume. We want to see a decline in volume on the WX leg. We want to see an increase on the XA leg, and then once again a decrease on the AD leg. In the decentralized world of Forex, we don't have the luxury of looking at volume like we do when we consider a data that comes from an exchange. So therefore, if you like to trade Forex and you want to look for trend reversal Gartleys and you want to find volume stats on currencies, the best thing to do is to look at the volume on the futures contracts traded on the Chicago Mercantile Exchange. That can give you an idea as to what the volume might be in the spot market. So now that we've looked at how to find TCGs and TRGs manually, let's find out how we can find them automatically when we consider the next section entitled Gartley Trading Method Automation.